What's happening, traders, and welcome back to Shift Trading. Today I'm just going to go over a few trades that I've taken this year so far. Markets haven't been ideal, but there has been liquidity buildup and opportunities. Whereas I normally trade my normal or delayed protractions in a trending market, we haven't had that opportunity yet. Market hasn't shown us that intent to move up or down yet. So how we've managed to adapt is just by reverting back to our absolute basics, and that is the ICT OTE entry. It's not rocket science, it's nothing difficult. You don't have to be trading this on the 1 minute to make money. You don't have to be forcing trades. There has been plenty of opportunities across EU and a couple here and there on GU. But if you stuck to two pairs, two majors such as EU and GU, you would be making money already this year. So how we see it is just simple price action. So market needs to, at least at our swing high in this example, sweep liquidity, displace to the downside, showing fair value gaps. Fair value gaps is displacement, displacement is fair value gaps. Simple stuff, guys. You just want to see those fair value gaps pushing market down, breaking structure. You're going to wait for this anchor point to form with your 3-candle formation as a swing low. And at that point, you set your Fibonacci and set your order. And where you take profits in these times is the lowest hanging fruit at your swing low. And walk away. And that is it, guys. You're literally taking what you need from the market and disappearing. Okay, now there's been a couple of opportunities we've missed, which could have made the weeks even better. Hence the sell from last Thursday. This is a bit different. This is a different type of OTE trading where you're on the 5 minute trying to execute between 8:30 and 11. I'm still in the process of testing this, but there shouldn't have been an excuse for this trade last week, Thursday. Today, what I saw is market pushed up aggressively during Asian session, tapping into a fair value gap above the swing high. Market then failed to displace lower, taking out these swing lows. Again, we've wicked below and market's broken up again and just swept above that high. Okay, it doesn't matter if it's a pipette or 10 pips, it's still a sweep above. Market then breaks to the downside. Just an important factor is the displacement doesn't have to be on that current time frame. I would prefer it being on a higher time frame, which I try to look for. I wouldn't always revert to the 5 minute looking for your displacements because you could get caught up. But in this instance, we could see a breakdown. Everything was mitigated except for this 1 hour fair value gap that formed once that swing low was there. That was just the selling point for me. So all we have to do now is wait for the 3-candle formation swing low to form. Once that formed, I set my limit order. Market then went up, tapped me in, and instantly dropped to the downside. I execute off the 62 level of the OTE because I'm guaranteed to get into the trade. Okay, if you start refining it and going a bit higher to the 70.5 and 79, you might miss out on opportunities, but your risk to reward will be greater. I know for a given, every single time I take this trade, I'm looking in at around 1.6R. 1.6R gives me an edge in the market and all I need to be profitable. Okay, so again, here, this is the trade I executed on Wednesday last week. Same thing, market has targeted its drawn liquidity from the previous day, then targeted the Asian range low, displaced to the upside, and on both occasions, we've managed to get ourselves a 1 hour fair value gap. I'll save that for you guys to go and check and study. I'm not going to be flipping through time frames to give you an illustration. Okay, market then gives us our anchor point with this swing high, low and low. Once that candle formed and closed, I set my limit order. Market then tapped in, suffered a bit of drawdown and went to the upside. Again, up to you with your testing. If you started refining it, this time you would have been tapped in and probably reaped a bit more than 1.6. I think it works out to like 2.4R or something like that. Again, do your homework. This is again another 5 minute entry that I'm still testing. And then the final trade is down here And this was the initial week when I started trading up again. Just ignore that. That was a mistrade that I'll actually break it down for you and what I did. This was a good lesson learned to push me forward and use the 61. So how I got in here, again, market swept the Asian range, displaced to the upside. What did I tell you in the beginning? We want to see an anchor point form before you set your limit order. This is so important, guys. You do not want to just be going, oh, I'm following it up, I'm just going to put it there, or put it there and put it there and wait for my 62. No, you see, we've got a sweep, displacement, and what happens, because the swing high hasn't formed yet, it smacks down and takes a liquidity again. Okay, at this point, we see a sweep of liquidity. I'm sitting tight, I'm waiting. See this good anchor point over here, 3 candle formation, market breaks structure, pushes to the upside, creates a fair value gap. Anchor high, set my Fibonacci, limit in order, taps in, take profit. Again, 1.6%. Over here, this was the reason I started just getting in at the 1.6. So 30-minute. If you drop down to the 30-minute, you'll see that this is a 30-minute fair value gap. Okay. I try to refine it, be a smart ass, and thinking that this would be a drawn liquidity or inducement to this level, it would tap and I could reap the rewards of a higher risk to reward trade. As you can see here, market just used all of this internal liquidity, popped up, tapped the 62, and then pushed to the downside. Whereas I was left with what, probably a pip away from getting take profit or entered into the market and take profit. So it was a bit of a slap in the face, but it was imperative that I had that happen to me, because I wouldn't take that chance again. I'm not going to try and get smart with my trades. It's literally just looking for a sweep. Okay, so we have a sweep of a distinct swing level, guys. You want to see a distinct swing. Okay, market then displaces down, breaking structure. I'm not moving this level down as the market keeps on going, so I'm not putting my fib there and adjusting and adjusting. I am using the swing points for London. I'm using the swing points for London. Okay, so that's the London high that's formed during my kill zone. I'm waiting for market to push. Market doesn't tap in over there, as you can see here. So it didn't tap us in. So remove my limit order. Formed a swing point over there, didn't tap us in. Moved a swing point over there, didn't tap us in. Swing point, didn't tap in. Swing point, market started retracing. And I should have just left my order there, which would have been a lovely 1.6% take profit, or in this case 1.5. So again, guys, it's just basic trading. Having a key understanding of where the daily bias is and what we plan to do is also imperative. Otherwise you'll get caught on the wrong side of the market thinking any push is just your breaker structure and displacement. It doesn't work that way. Okay, so today I'll just give you a quick idea of what I was looking for on the higher time frame. So like I said, drawn liquidity was the previous day. Asian range took that. There's my swing drawn liquidity. Market displaces down, taps to 62, and I am anticipating market to go a little bit lower. Reason being, DXY looks like it's pushing towards a monthly fair value gap to the upside. So I want to be selling EU. All right. We are currently in a daily OTE, but I have not seen bullish displacement to the upside. Okay, so my bias is pretty neutral at the moment. I'll take buys and sells depending on the obvious sweeps and displacements on liquidity. Okay, hope that helps you guys. Let me know if there's anything you need. Drop some comments. Feel free just to ask for advice, and I'll help you out best I can. All right, cheers, guys.